All right, what up YouTube? In today's video, I want to make some Bitcoin price predictions, but I want to show you guys some really interesting on-chain analytics. And I want to talk about what you have to gain by trying to hold out for Bitcoin to come down to say 14K versus what you have to lose if you're wrong and price starts pushing to the up because a G7 country's currency collapses like the euro or the pound or the Japanese yen, all of which are on the verge of absolutely going to zero, completely collapsing. Ready? Let's dive deep. We're going to start off with his speech by Root at Bitcoin Amsterdam, and he's going to explain the difference between the supply levels, meaning how much liquid supply there is of Bitcoin, how much more Bitcoin is getting mined every day versus how much was getting mined in the 2015 bull run versus the 17 bull run versus now. And when we talk about the amount of Bitcoin that is actually on exchanges right now versus what was there in 2017 versus 2015 is telling us that the next time that Bitcoin starts to rally, it is going to be absolutely parabolic.
Than 25%, we call that supply liquid because that supply could basically be spent at any moment in time, whereas the hodler, doesn't want to part with his Bitcoin. He wants to pass it on to the next generation. And so if we do this for the whole supply of Bitcoin, we can see that we get this result. The majority of coins is actually illiquid, which makes sense because Bitcoin, the main use case of Bitcoin is a store of value. And so the liquid part could be actually seen as Bitcoin's scarcity. If you think of price as a reflection of supply and demand, the supply is actually are the coins that are available for trade, and which is the liquid supply, as shown in this graph. Now, is there another interesting observation that we can see from this graph? Now, let's look at the growth rate of a liquid supply versus the growth rate of the total supply. Now, we can see that the growth rate of the total supply is always outpacing the illiquid supply. For example, first halving, we can see 3,900 coins a day are added to the network, whereas only 2,700 coins a day are becoming illiquid. And so that remains until the third halving here. And so actually the supply of Bitcoin is becoming more abundant. The liquid supply available for trade is becoming more abundant, which actually naturally would reflect in diminishing returns, which we have seen in Bitcoin's history as well. Now, an interesting thing is that since the third halving, we only have 900 coins a day added to the supply of Bitcoin, according to Bitcoin's inflation schedule. And we have 1,700 coins a day added to illiquid supply. So illiquid supply is currently outpacing the growth rate of the total supply. Now, you could argue, well, haven't we seen that in the second halving as well? In the beginning there, after the second halving, you can see also this huge increase, and then it kind of flattens out. And the answer is yes, that could be. But let's zoom out a little bit, because with Bitcoin, we know the future supply schedule. So we can zoom out a little bit. And now let's try to model this illiquid supply growth. And this is a model I made, and I call it the hodl model, which is a conservative model of trying to predict the future growth rate of a liquid supply. And it's a very conservative model. As you can see, we are above the model value. But the interesting thing is that even with this conservative model, still at the third halving, is the inflection point, where is the highest amount of a liquid supply versus illiquid supply. And so after the third halving, liquid supply is narrowing down, Bitcoin is becoming more scarce, whereas before the third halving, Bitcoin was becoming more abundant. And now let's zoom in on that liquid supply a little further. We're going to look at it in percentage terms. How much percent of liquid supply is shown versus illiquid supply, on any given day. And we can see here that, for example, at the third halving, we had 28% of the supply being liquid, and where the remaining 72% would be considered illiquid. And I also translated the hodl model into this chart, and it's immediately obvious, maybe even more visible in this chart, that the third halving is this inflection point, because you can see that the hodl model tops out. That's the most supply. Bitcoin was the most abundant there. And since then, we have going down, and we've going down steeply. Now, we are actually quite below the model value. We could return a little bit more to that model value towards the fourth halving, but it seems that around that fourth halving, we're gonna have a Bitcoin that's gonna be a lot more scarce than we had at the third halving, maybe more like the second halving. And if we look, we're gonna add the price to this as well. And those white dots that you can see in the price line are the all-time highs that we made. And in the first halving, this green dot that is shown, you can see that we had 21% of the supply being liquid. And we had these huge price increases in 2013. Now at the second halving, we had around 25% of the supply being liquid, and we did a 20x or so. Now in the third halving, we had 28% of the supply being liquid, available for trade. And so that was the highest amount ever that we ever had. And we had we still had a reasonable bull market, but it was a little disappointing. Now that kind of makes sense, right? We had to start out from an abundant Bitcoin. But since then, we have been going down quite a lot. And you might wonder why, if Bitcoin is so scarce now, why is price so low? Well, as I said, price depends on supply and demand. And this is only the supply. Now, can we also estimate demand? And can we measure demand in a way? And there's various ways of doing this, but my time is almost up. So here you can see this white line, which is a proxy for demand, also done through on-chain analysis. And you can see that those peaks, they correlate with those all-time highs, with those white dots. And we can see that demand currently is at this all-time low, right? We only had this peak of demand in April, and then it flattened out. But we can see this clear pattern in the demand signal that it seems to return every halving. So if it's going to return the next halving, Bitcoin is going to be a lot more scarce. Thank you.
So do you understand what Root was saying there? By illiquid supply, meaning the amount of Bitcoin that people can actually purchase and actually buy. Right now, the price of Bitcoin is coming down because there's just not enough of a demand for there. There's not a ton of people willing to run and throw their money and FOMO into Bitcoin. But when the market turns bullish and there is that demand, the supply side is tighter than it's ever been. Crazy to think about right now. So let's dive into these on-chain analytics and let's take a look at these charts. So one of my favorite sites to check out is CoinCodex. They use machine learning and AI indicators, and it's free. So if we swing over here to CoinCodex, we take a look at their analysis and their indicators. Their indicators are saying Bitcoin to 18.6 over the next 5 days. Over the next 30 days, they're saying 15.294. 3 months, they're saying 9.571. 6 months, they're saying back to 14. And 1 year, they're saying back to 26. According to our Bitcoin price predictions, the value of Bitcoin is predicted to drop by 2.8% and reach a target of 18,625 by October 28, 2022. According to our current technical indicators, the current sentiment is bearish, while the fear and greed index is showing 23, extreme fear. Bitcoin recorded 12 out of 30 green days with an average price velocity of 1.63%. Taking a look at the Bitcoin fear and greed index, based off our data from October 23rd at 9:30 a.m., the general Bitcoin sentiment is bearish, with 5 technical indicators signaling bullish and 23 signaling bearish. Bitcoin is currently trading below the 200-day simple moving average SMA. The 200-day simple moving average has been signaling sell for the last 296 days since December 31st of 2021. The price of Bitcoin is currently below the 50-day simple moving average, and this indicator has been signaling sell for the last 17 days since October 5th of 2022. The most recent death cross in the Bitcoin market happened 282 days ago on January 13th of 2022. Meanwhile, the golden cross last occurred on September 14th of 2021, which was 404 days ago. Based on our current technical indicators, the Bitcoin simple moving average will drop in the next month and will hit a target of $22,424 by November 22nd of 2022. Bitcoin's short-term 50-day simple moving average is estimated to hit $19,412 by November 22nd of 2022. Now we're going to talk about the golden cross and the death cross with your simple moving averages. And what I want to point out here is right now Bitcoin's at 20,000. Even the worst or the biggest bears are saying Bitcoin down to 10K, right? But when we were at 60K, the bears were saying 30K was going to be bottom, right? Then we get down to 30K and the bears are saying 20K is going to be bottom. When we get down to 10K, the bears are going to be saying 2K is bottom, right? But you can see every on-chain analytic is signaling bullish signals, right? If you're wrong, and say you don't buy Bitcoin at 19,000 and price starts pushing back to the upside, at what point do you FOMO in? Is it 24,000? Is it 26,000? Is it 30,000? At what point are you going to start paying a premium, and how much is that going to cost you versus if you just started the DCA right now at 19,000? So if we say we're going to come down to 14K, that's where I think a majority of people are calling for Bitcoin down to the 14K range. Even if you came all the way down to 13, you're talking about a 29% to the downside, right? So if you're right, so if you buy in right now at say 19,000 and price comes down to 14K, you're down 30%, right? It might only be 20% in reality. It could be either or. Now, if price starts to go back up, when price gets to 24,000, you're at 30%, give or take. So if price started to push up right now, how many of you would be FOMOing in when Bitcoin got to 24? I don't think many. I think most would think that Bitcoin's going to double top over here and it's going to come all the way back down. So that means you wouldn't be buying at 24. You're not going to buy at 23. That means that most likely you're not going to FOMO in until Bitcoin gets upwards around 31. You know, once it breaks that 24K support and starts to run, you're going to be trying to buy back here on a retrace, and you might not even start to wait until it gets down to 25 this time, because you're going to be like, crap, I don't know if it's going to turn around or rally up again, because this is going to be the signs that G7 countries are collapsing. You know, for us to get off bottom here, it's going to be bad news for the rest of the world, right? Really, really bad news. So you figure you're going to have to FOMO in at probably 31. Right? If it breaks through this resistance here at 24 and then starts to push up to 30 and starts breaking through at 30, you're going to have no choice but to FOMO everything in at 30 at the very least. And that's 65% difference from its current price right now. So do you hold off hoping to save yourself 30% or 20% when if you're wrong, it's going to cost you 65% at the very least? I mean, Bitcoin might go to the moon without you, might have none, because you're going to constantly be waiting and waiting and waiting. And if one person, Sam Bankman-Fried, gosh, can't stand that guy. Brian Armstrong, can't stand that guy, right? How about Kanye West? How about Jay-Z? How about any celebrity start saying, you know what? I'm done. I'm done with banks. I'm done with their BS. I'm done with this cancel culture. And I'm going to start supporting Bitcoin. I'm going to integrate Bitcoin into all my businesses. Everything sold in the Yeezy verse will be sold with Bitcoin, right? I mean, that's huge, guys. Huge, huge. So if we swing back over here to trading view and we turn on our 4 simple moving averages and we go into our settings tab and we turn off the 20-day and we turn off the 100-day, that's going to leave us with the 50-day moving average and the 200-day moving average. So they're saying that the last time that we had a death cross was on January 15th of 2022. The most recent death cross was on January 13th of 2022. So that's what they're referring to. We can see right here on the charts, this is our 200-day simple moving average and our 50-day simple moving average. This was our death cross. Normally a really, really bearish signal. And what happened? Sure enough, price fell down to the downside. Same thing over here. We had a bearish cross here at 40,000. And again, price fell all the way down to 30,000. Now, when we're talking about a golden cross, that is when this yellow line, the 50-day simple moving average, and I just changed the colors to make it simpler to see, is when the yellow line crosses back above the purple line. So we had a golden cross right here, which triggered this bull run over here. We had a golden cross right here, but it was late, followed by the 2020 crash. Over here, we had another golden cross. So we had a golden cross here, which resulted in a 227% rally over 82 days. This one got cut short because of the economic situation, but it wasn't shortly after that we had another golden cross right here. And that golden cross resulted in a almost 800% rally. And if we look over here right now, they're saying the next golden cross that we should see, they're looking around November 22nd of 2022 for the simple day moving average to be around 19 and the 200-day moving average to be around 22,000. So what they're saying is this purple line is going to come down here to about 22,400. And they're saying this yellow line is going to come up here like this to around 19,000 something right around here. As more time goes by, the yellow line is going to go up a little and the purple line is going to go down a little. And then we should be getting that golden cross somewhere in this zone between 19,400 and about 22,000. So if price just continues on this same path, we're going to be getting that golden cross, which in history, even if you FOMO'd in here, you would have only had to wait a few days. I mean, if you would have FOMO'd in at 9,000 there when the golden cross happened, it wasn't more than 57 days later and you were already back up above your same entry position. So in the last 4 or 5 years, if you would have bought in anytime there was a golden cross within a few weeks, if not a few months, you were in the profit. And then it was straight parabolic after that. And with the supply strength and there being less supply on exchanges than ever before, man, oh man. We swing over here and we take a look at BTC on exchanges, 1,968,496. You take a look at these charts over the last year, the orange line is BTC price and the green line is the amount of coins on exchange. You can see down here, the amount of Bitcoin on exchanges is at all-time lows. It really is for the last year anyways, which is huge. So when price starts to rally, I mean, we're going to see Bitcoin starting to make some leaps and bounds, guys. It's going to be parabolic. So drop some comments below, guys. Let me know where you think the price of Bitcoin is headed. I personally think Bitcoin is $1 million asset. I think it's the most undervalued asset in the entire world right now. I don't think there's ever been an asset that has more value than Bitcoin, because Bitcoin represents freedom. It represents us, the little people. It's your chance to fight back against the collective and the world powers and say, hey, like, we don't want to participate in your fiat Ponzi. We want to remove our money from that. Yeah, I'll go rant on all day. I'm part of the Bitcoin Union. I don't know if you guys are part of the Bitcoin Union, but to me, Bitcoin represents my son's last opportunity at not growing up in a corrupt system controlled by the powers that be and their powers over the money printers. So drop some comments below. Let me know what you guys think. Again, my name is Ryan Meta, and I'll catch you guys in the next one.